Hi, it's Grant from B-Star. Welcome to a recording of our forum presentation. We'll start the forum presentation by focusing on the CGT reforms. The CGT reforms insights relate to small family SME business valuations, but there are some other important content around the data mining app updates, 4 accredited growth workshops, accounting industry trends, AI partnerships, and next steps. Please feel free to share the recording of the forum with your other partners and directors, and also key staff that will be involved in the rollout of your scalable business valuation services. Finally, I'd like to thank Scott, Sharon, Linda Nikhil, and Matt James for helping put this session together. It's been a great team effort. So let's now have a look at some of the opportunities created by the CGT reforms. We're going to look at those in detail around existing and new clients, your networks, your centers of influence, social media. We're also going to introduce our business valuation resources package and how it can help you engage both existing and new clients. We'll touch base on key data guidelines and standards. We'll discuss the importance of completing a risk assessment as at the CGT business asset cost-based date, and how you can use data to strengthen independence and compliance. And we'll show that in a new case study that we've put together. And the final part of the CGT reforms will be to compare business valuation to sale appraisal processes. So let's have a look at the opportunities. And we are encouraging all of our alliance partners to consider it an advisory obligation. Accountants and SME advisors need to make their clients aware of how the impact of the CGT reforms will affect their business wealth and also their personal wealth. And it starts with segmenting your client base. And obviously, you want to focus on clients that are most likely to be impacted now and in the future. Or maybe a client that needs to set a CGT business asset cost base. But 2 client groups that stand out for us are those clients in the succession, sale, and exit phase of their business, and there's a bucket load of them. Plus, clients who are looking to transition wealth internally through business succession planning. And this will provide you with an opportunity to scale up your business valuation services, and we're going to support you with continuous training, and we also can offer verifiable CDB points. So always start with the opportunity at looking at your existing client base, but also there'll be opportunities to attract new clients through your network, centers of influence, social media, and that's what we're going to show you when we look at the resource package. One of the documents in the resource package is a checklist that shows known flaws, risks, and concerns. So if you're looking to get referrals from other advisors or accountants, then you would show them this checklist so it can give them better information around what is a compliant valuation. We're encouraging all our alliance partners to create a dedicated page on their website and also update their social media profiles around their business valuation expertise. And that will lead to running social media campaigns with supporting messages. And probably the first ideal client is your own business, your practice. And we'll go through a really simple example now of a case study on potentially an ideal client that will generate from the CGT reforms. So let's have a look at this internal business succession planning case study. It's a residential building construction company. It started on the 1st of the 7th, 2020. Sole director owner put $200,000 into the business, issued 100 shares. The share value was $2,000 as at the 1st of the 7th, 2020. So let's look forward. Let's just say this client sold their business on the 30th, sold 50% of their shares on the 30th of the 6th, 2030. So their succession plan was an internal business succession event. So at that stage, the business was turning over 12 million. It got valued, enterprise value of 9 million plus working capital usage, also plant equipment, so the balance is goodwill. There were some other tangible assets. So the total net tangible asset value was $9.45 million, and divide that by the number of issued shares, there's a share value per share of 94,500. So with this particular client who's looking at internal succession, selling 50% of their shares to an investor and owner, benefit from a CGT business asset cost-based date valuation. So if you look at the valuation date as at the 1st of the 7th, 2027, if you're able to do that valuation, you can come up with an asset cost base, and there may be some very strategic opportunities for your clients. Now, we're not CGT specialists, so we're not going to go into deep dive of all the concessions, et cetera, but we just wanted to highlight one of the important client groups that would benefit from a valuation as at the CGT business asset cost-based date, and we're going to go through that in more detail. So that's one of the client opportunities, and we thought to help you get more opportunities like that, we've developed and released an interactive PDF that provides business valuation services resources. This includes a white paper, checklist, articles, case studies, pricing model, flip books, and exclusive data. If you haven't got a copy of this interactive PDF, please let us know, because it helps close a worrying education gap. For example, 42% of SMEs don't know what their business is worth, and a lot more wouldn't know what a compliant valuation is. Or maybe you've got some relationships that you want to get more referrals from, and this can be a great marketing document, because as I said earlier, it goes through in detail what a compliant valuation is. So please use this resource to help close that client education gap. Also share it internally with your other partners, directors, also with your centers of influence and referral partners. And as you can see here, one of the key documents is that checklist that I mentioned earlier, and it helps referral partners identify any risks with current valuations or valuers. And you can also use the package to generate referrals. So you might have some relationships with industry groups, associations, share it with them. Maybe you've got clients who are industry thought leaders. And obviously you've got those traditional centers of influence around law firms and financial advisors and banks. And they're all going to be impacted by the CGT reforms, and it gives you a point of difference to engage them. So if you haven't got a copy of the Business Valuation Services resource package, please contact us, because it's a great starting point to assess the opportunities with the CGT reforms. So now let's move away from the opportunities to processes and being prepared. On this slide, you can see an extract of two important data compliance guidelines and standards that apply to the CGT reforms. The first one is the ATO guidelines for reliable information. The second is the IVS Council guidelines for a risk assessment analysis. As demand for valuation services increase, so will tax office audit activity. And it's critical you understand, with our support, the ATO, professional associations, and IVS Council standards, and adjust your process accordingly. And recently we got a call from ASIC, and they said, we want to know more about your prudential methodology. And I said, that's fine, we'll protect it 100%. But I said, have you looked at some background information on the methodology? Have you downloaded our white paper? Have you looked at these case studies? Do you know that we had a worldwide patent issued in 2007? And I said, we will support our prudential methodology to the very end, but you've got to put in the effort. So again, they need to go back and look at what the resources are available, because it's fully disclosed. But one of the challenges for a lot of accountants and SME advisors, when it comes to scaling up, you might build expertise with current staff, current directors, but there's also a lot of changes sometimes in staff within the practice. So you've got to keep reinvesting in that. And we see that as one of the big risks. We want to make sure the people involved in business valuation services are fully equipped with the knowledge and training to deliver compliant valuations. And that comes back to the key content about being prepared. And I want to take a deeper dive into the requirement of a risk assessment or analysis as at the valuation date. So if you look at the commentary on the screen, to help ensure a future business valuation is compliant, accountants and SME advisors should complete and document an industry review and a business-specific risk analysis as close as possible to the CGT business asset cost base as at the 1st of the 7th, 2027. And the risk analysis should be supported by evidence, data, and a consistent process, making it both replicable and defensible. So what does this mean for your current valuation process? And what is the primary activity that you need to do with clients to help support your valuation? Let's have a look at the answer now. What it means is it's really important that you complete a risk assessment, or in our world, it's called a risk profit value driver or RAVDR assessment on your client's business as close to the 1st of the 7th, 2027. So you can see here, this is the process that we're going to roll out within our internal alliance partner base. We're encouraging each of our alliance partners to get their clients to complete a risk profit value driver assessment as close to the 1st of the 7th, 2027. We encourage them to save that assessment and then review it by the valuer, and using judgment and data mining app data, a new updated copy is saved and stamped. And this is the version of the risk assessment that is used for a future CGT business asset cost-based valuation. So in 10 years, if your clients sell the business and you want to look at that cost base, you go back and enter the figures 2027, 2026, 2024 with your adjustments, and 25, and then you look at it and you can actually access a risk assessment at that date, and that improves compliance. So your client's business can be very different to what it is today and in 10 years, but there's a requirement to do the risk assessment as at the valuation date. And on your screen, you can see the risk scorecard and the capability to date stamp that risk assessment. And that's one of the key insights that are not publicly discussed around the process. And that reduces significant risks for your valuation by having a risk assessment completed as close to the asset cost base date of the 1st of the 7th, 2027. Now, obviously, if you receive new clients after that date, it's not possible to have done the risk assessment as at that date. And one of the great features of the data mining app is you can filter the data by a date and revenue range. So you align it with the cost base date, and then you can look at responses from independent owners and create a risk assessment. And obviously that's going to be a limitation and recorded in your engagement letter. So one of the key insights that we wanted to share with you when it comes to risk assessment, you've got to really focus on that cost-based date, and that will just take the stress away from your valuations. And even if you've got multi-owner business clients, get each of the directors or owners to do the risk analysis on their business and then amalgamate the responses, come up with what you think is the right responses using your judgment, then save that for some event to happen down the track. So that's a really important part of the insights. What we want to do now is we want to switch to how data can help strengthen independence and compliance. I mentioned earlier about the importance of accessing reliable data. As we said, it strengthens independence and compliance. So what I'm going to do now, I'm going to walk you through data that you can use as part of your process for each stage of the business valuation process, when it's before, during, and after. So the first thing with data, you want to make sure that you can access accurate industry financial data and non-financial risk, profit, value driver answers and concerns. And what you want to do is you want to look and select the right industry and generate reports to show that you've got good sample size of comparative data. And you can also access the risk, profit, value driver and concerns data, maybe for a possible due diligence, because it looks at and identifies the key risks, positive and negative, in the business. And if there are limitations in getting access to accurate financial and non-financial benchmarking data, you would make that a limitation in your valuation engagement letter. But also what the industry benchmarking data does, it helps set clients' expectations. You might have a client that says, look, my mate said I can sell my business for 10 times its profit, but the industry average is 3, the benchmark is 4.5. So again, it sets expectations as at the engagement date. Another classic example of data before you start your valuation is if you've got a client operating a business that is capital intensive industry, like machinery, logistics, something like that, and you're valuing the business on an EBIT margin, when you look at your reporting periods, maybe it's 2027, 26, 25, what you should be doing is you should be going before those dates to see if there's any instant asset write-off that would affect your depreciation expenses in the reporting periods. So it's really important when you're developing compliant valuations, you look at the quality and reliability and comparable data even before you start your valuation. So let's have a look at some of that data. On your screen, you can see an industry business valuation assessment report and an industry financial performance benchmark report. And you can see here it's a residential building construction. We've got a sample size of 29. Now, the importance of the sample size is based on the quality of the information and data. And I'll go through that in a sec. You can see what's really important, that the comparison of data must be comparable. We've seen valuer reports where a business turning over 1.5 million is compared to a pre-listed company turning over 50 million. Is that generally comparable data? So you've got to get comparable data. You've got to have a good, accurate sample size. And obviously you can look at the industry average multiples and industry benchmark, which is the average of the top 20. Another important thing about data is when it comes to your financial performance data, you've got to look at EBIT margin percentages. So you can see here the industry average is 8%. The industry benchmark, which is the average of the top 20, is 30%. But one of the key challenges when it comes to EBIT margin benchmarking data is you've got to compare, once you've worked it out, to a comparable like-for-like database. So we see a lot of valuers, they'll put a tremendous amount of effort in coming up with their EBIT margin. But when they come to validate it, they'll use industry research report net profit margin data, or they'll compare it to the ATO. So they don't compare their key assumptions on EBIT margin to like-for-like data. One of the great strengths of the B-Star Alliance Partner platform is we only have adjusted benchmarks in our database. So you're comparing like-for-like data. So that's a really important insight when you're preparing your valuation, to make sure the data that you're comparing it to is not only comparable within an industry and revenue and date range, but also it comes from a like-for-like data, particularly the EBIT margin values. And also we can talk about the non-financial KPIs. Know what key risk, profit, value drivers to look at. So on your screen, you can see the key drivers, both strong and weak, for residential building construction businesses. So one of the strong drivers is word of mouth referrals from past customers. But a lot of valuers don't look at the non-financial KPIs that affect the multiple. And that particular KPI, word of mouth referrals from past customers, doesn't appear in a balance sheet and P&L. So you've got to make sure your valuation process includes both financial benchmarks and non-financial risk, profit, value driver benchmarks. And you can see here, the report also looks at the key concerns, strongest concerns, and weakest concerns. So if you're doing a due diligence on a business and you look at this data, you know what to look for before you start your valuation. And that's really important because that, again, protects the integrity of your valuation. So that's just some examples of the data available that you can access to deliver compliant valuations. And then once you start your valuation, it's really important that you do an in-depth risk assessment. Analyze somewhere between 60 to 90 risk, profit, value driver KPIs. That's what every one of our alliance partners does. They look at those key non-financial KPIs that affect the performance and value of a business. When you're looking at your clients' responses, whether it's the risk assessment or the financial data or non-financial data, don't accept their responses. Access autonomous data to strengthen independence. That's going to be one of the biggest challenges for accountants and SME advisors that are valuing existing clients. You've got to demonstrate that you use judgment and you've changed clients' responses and you can back it up with data. And when you look at the data to back it up, as we've talked about, it's got to be comparable, like for like data, not only to challenge, but support your judgments. And then you can use top performer reporting to investigate and validate each assumption. And then you can see here, this is an example of one of the benchmark reports out of the data mining app. It looks at the business planning KPI for residential building construction businesses. So when you're doing that risk assessment, and one of the KPIs is, does the business have formal plans? You've got to make an assessment based on your judgment. And if you said, no, it doesn't, and it's got poor business planning, strategic planning, then what you can do for that particular assumption, you can go and pull out a report that other business owners have responded to. So you can see here, 110 of the 334 valuations approved, which is 32.93, independent owners says we have poor planning. And again, you can use external data to back up your judgment. And that means your valuation is replicable and defensible with external data. So these are just some of the examples of reports that you can access to improve the compliance of your valuation process and reporting. And that then goes to the third stage in the process, which is at the end, where you've got your judgment and data to come up with a conclusion of value. Data supports judgment. It doesn't eliminate it, and that's a key point. And then at the end of the process, you want to record key data assumptions and limitations in your valuation report, and you want to make sure that your clients sign a data valuation information memorandum. And as we talked about earlier on, accurate, reliable data is essential to provide compliant business valuations, support your conclusion of value, strengthen independence, challenge judgment, and protect the integrity of your valuation assumptions and outcomes. So let's have a look at a data case study, particularly a cafe business, because I wanted to show you how top performer insights can strengthen your valuation process. So this is a case study based with a New Zealand cafe owner. They got approached by the property owner and said, look, we're going to do a redevelopment and we want to offer you compensation to vacant the premises. So the property developer got their accountant to do a valuation, and the valuation included a very low rule of thumb multiple. And that particular value really got the owner distressed, the cafe owner. So they went to their accountant, one of our alliance partners, and they said, can you complete this valuation and can you help me understand why they've given us a very, very low multiple without any methodology. So when our alliance partner, the accountant, looked at the valuation process did not assess location goodwill. It did not assess security of tenanture, strong foot traffic, large and loyal customer base, the owner experience, they had over 30 years, trusted supplier relationships, they had favourable terms and conditions, and they continuously got from their staff an employer choice rating. And they were able to look at the top performer report, and two of the KPIs that relate to the risk score, the business had a very favourable outcome. But the valuer for the property developer used a rule of thumb multiple that didn't assess any of these non-financial KPIs, and they did not have a methodology to back up why they used such a low multiple. So this again is the importance of having data to support your key assumptions and focus on why, in this particular case, the multiple should be a lot higher because it has strong risk profit value drivers. And the data mining app, which is where this report comes from, can be used to support your conclusion of value and also improvement planning. So let's pause for a moment and say you get an ATO audit in the next 3 years and you've got notification of the audit from a client CGT valuation. In your valuation process, you use the data mining app within a comparable date and revenue range to identify strong and weak industry risk profit value drivers, the business owner's highest and lowest concerns. You're able to validate your key risk profit value driver assumptions with independent data, and also you analyze the top performer KPIs, both profitability, cash flow, sales growth, valuation multiple. The data mining app has currently 2.58 million non-financial benchmarks. With the support of our new channel partners, we are tracking well to achieve over our launch goal of 5 million benchmarks by December 2026. And the Australian Tax Office doesn't have access to this data. And we think that's going to be something that's really important for our alliance partners to understand the power of non-financial KPIs, how it can help you with both valuations and business advisory services. I'd like to end the session on the CGT reforms by just very quickly discussing the difference between business valuation and business broker sale appraiser data and processes. So you can see on your screen here, the business valuation is based on an EBIT margin. You add back your actual owner benefits, deduct commercial benefits. You assess the non-financial drivers. We've gone through that. And the EBIT multiple is determined by a risk analysis and the working capital usage of the business. Sale appraisal, a lot of them will base the appraisal value on EBITDA margin. They'll add back owners' actual benefits. Some of them won't do a deduction for owners' commercial benefits. They'll look at and assess current market conditions, maybe do an informal driver analysis. And the EBITDA multiple is based on recent sales data. So the processes are different. And some valuers that we say, they'll work out their EBIT margin, but they'll source sale appraisal data to validate their EBIT margin. And it's not the same process. Every SME owner should have their business valued before accepting our sale appraisal. That's B-Star's position. And we have some great relationship with business broker groups. We recommend, if there are differences, they're reconciled to prevent buyer-seller remorse. And one of the questions I'd like to ask you is, would you use sale appraisal data for a business valuation for internal succession planning? So that's the end of our CGT reform insights. And we're going to keep updating our alliance partners on information when necessary. We encourage every accountant, every SME advisor to implement the risk assessment process and scale up as soon as possible. So let's now move into a quick overview of the data mining app updates. As we've talked about throughout the CGT reform session, the data mining app data benchmarks and reporting can be used to validate all assumptions with independent comparable data. It is the only source of non-financial KPI data, and as we said, it goes to about 5 million, hopefully by the end of December 2026. But not only can it support your valuation assumptions, but also it can be used for improvement planning. So let's have a look at some of the new resources from the data mining app. So the first thing is we get great information that can be used in social media campaigns. So on your screen here, what you can see is an image that we've created for our alliance partners who want to attract more dental clients to the practice. But the message that we communicate on the image is around those non-financial KPIs, because there are a lot of different companies that have financial benchmarks. But if you want to attract new clients, you've got to look at different messages, right? And if you can relate them to the non-financial KPI, it's something new and exciting for potential or new clients. So the data mining has some great data on those particular KPIs. It also has got some amazing flip books. And these flip books can be used to engage clients for business valuation and advisory services. So on your screen, you can see an example of a flip book for building and construction businesses. And the key message with this particular data is we want to help our clients become top performers at every stage of their business life cycle. So we've created these flip books that you can use to engage clients in different high value industries. And you can see it starts off with the start, buy, invest phase. It includes key data mining app answers and concerns reports that are really, really relevant to business owners in the industry. It introduces accurate benchmarking data. And then it moves into the grow and improve stage, where it focuses on the biggest variance with its profitability, also financial and non-financial benchmarks in the flip book, and the key concerns and stuff like that. So this is the key way to maybe engage clients to grow business advisory services with data that they haven't seen before, but do it in a very professional way, which is the flip book. Some of our alliance partners are using them in digital marketing campaigns, but also the flip book includes the succession sale exit clients, right? And that's when, again, you can bring in your valuation services. So what we've done is we created a range of different flip books for high value clients. We've also got one for dental practices, finance brokers, financial planners, GP medical practices, law firms, physiotherapists, and we have an SME version. And we're actually doing a series of events with Walter Kluers on what law firms and GP medical practices need to do to become top performers at every stage of their business life cycle. So the data mining app information is great because it helps you not only with your valuation assumptions, but it can be used to engage clients and also grow your business advisory services. So please, if you haven't seen that information from the data mining app, that's a very simple extract. Give us a call and we can go through you in more depth of the resources available. The final thing that I want to talk about is a really exciting opportunity with 4 growth workshops. And these workshops can be applied to your own practice, but also with SME owner groups. And the ones that we want you to focus on are the ones that are 3 to 5 years out from succession, sale, and exit. And as I mentioned right at the start of the session, transitioning ownership internally through internal business succession planning. And the reason why we put these workshops together is we wanted to create a package based on education learning outcomes, because we think that's a massive market. It gives you a competitive advantage to target high-value industry clients. So I've mentioned before dental practices, GP medical practices. Well, we've got a workshop that you can access on internal business succession planning that will help them attract new contracting dentists or doctors. And that's the top industry concern. So you can now offer a workshop to the number one solution for that high-value client group. And it all adopts a family office services model, and they find the money to pay for it because it's highly relevant to the business. So we're going through a process. We've created the SME version. We're just going through a process to accreditate the financial services version and also those high value industries. So let's have a look at what we've done with the financial services sector. We've come up with the full workshops. The key messaging is around making financial planners, advisors, better business owners, and industry top performers. And they can register for 4 different workshops that we're nearly finished the accreditation process. Becoming an industry top performer, that's the lead workshop. Attracting high value industry clients and building active referral partnership, SME family office services, and internal business succession planning. So when it comes to the lead workshop, we're actively promoting the top performer workshop. And we're really focusing on those financial planners who really want to grow and improve their business. They get a risk profit value driver assessment before the workshop. They're required to complete it. And then there's a workshop that you can run, and they can go through and update their risk profit value driver analysis to identify areas to improve their business. So it's a scalable solution. It's not a one-to-one meeting. It's a one-to-many meeting. And after they attend the top performer workshop, they're able to get a package that includes their scorecard, the top performer profit KPI, valuation benchmark reports, and high concerns and actions. So let's have a look at the report that they get after they attend the workshop. So let's look at that now. There's your RAVDA scorecard. There's the data mining app profitability KPI top performer report. Shows the variances between average and benchmark profitability. The biggest KPI variance is profitability. The industry financial performance benchmark reports, the industry valuation benchmark reports, and then some answers and concerns reports for those key concerns within this industry group. It talks about documented management and ownership succession plans, clients leaving as a result of business succession. So it takes a deep dive in some of the areas that they've rated as a high concern. And then they receive some action items. When they do their risk profit value driver analysis, if any of those KPIs are rated with a medium to high or high concern, as part of the package, they get a range of action items to focus on improving that particular concern. So that's an example of how the top performer workshop process works, in this case for financial services, financial planners, financial advisors. But one of the outcomes of the top performer workshop might be the client is interested in internal business succession planning. So you can then offer that workshop, and it breaks it down into a range of different key learning outcomes. But internal business succession planning is both a growth and succession planning solution. And it's highly relevant, and it's one of the key client groups that we encourage accountants and SME advisors to focus on, because they have the capacity to pay, and the services that they require all based around that family office services model. And you can see here there's an image on your screen. We were lucky enough to have a presentation to the Morgan's Financial Group branch owners on that particular topic around internal business succession planning. So that's just some examples of those 4 growth workshops that you can use not only for your own business or practice, but to target those ideal client groups. Now, what I want to do now is I want to finish the session by quickly going through some accounting industry trends, AI, some partnerships, and then next steps. So let's have a look at our new infographic. We've created a new infographic on the top concerns for accountants. So if you'd like a copy of the infographic, please let us know. We'll send it to you. You can share it with your other partners, directors, your key stakeholders, and even staff. One of the biggest challenges that the infographic identifies is the variance with profitability for accounting firms. And we think that's going to be a challenge for a lot of accounting firms going forward. So again, this is where you can use that data mining app to show what top performing business in the accounting industry are doing different to achieve benchmark performance on this particular profitability KPI. We're going to do a separate session on AI, whether it's a risk or an opportunity, but also we want to show you some concerns around sharing information with AI around protecting your data sources. So we'll go through that probably in September 2026. And then we just wanted to finish the session by giving an update to B-Star Alliance partners on some of our channel partners, where we're at, and next steps. We've got a great relationship with the Bank of New Zealand. We've gone through a process around a pilot for health industries, and we're scheduled to catch up and look at the way that we can span what we're doing within for every SME customer in New Zealand. And we've also got a great relationship with Steve and the team from ClearPath Financial Management, and they're looking at ways to bring in business valuations to their finance applications to help their SME clients. I think that's so exciting. We've also reconnected with the FBAA, and we're going to start working with them again. And also, we've got a lot of interest on those workshops from Australia's leading wealth management companies to introduce internal business succession planning to advisors. So that's just some of the opportunities. The next step, we just encourage everyone to prepare their CGT plan. Don't leave scaling up to too late. The earlier you start, the better the outcomes, because it takes time to understand and deliver compliant valuations. And we encourage you to look at the information and the process that we've gone through today and see how you can adjust to make sure that your valuations are compliant. And if you're interested in looking at those workshops, please let us know, because we think that's going to have a massive impact on high value clients who are looking to transition ownership internally and create wealth outside their business. So that's the end of the session. Thanks for joining it. Please share it with your team, your partners, directors, key staff. If you'd like to know anything about the insights, please contact us, and we look forward to hearing from you. Bye for now.